Welcome to the Power Investing Monday Macro video. Today is December 27th, 2021, and I'm Tommy Lackey. This will be one of 3 new videos created for the Power Investing subscribers to help start their weeks informed. The goal for this video is to cover the macro view of the markets so that you can then move on to creating your own trade plan for the week. The second video that I'll do will be sector focused, with ETF charts and ideas along with the subsectors that we create. And then the third will be focused specifically on ways to find new setups in individual stocks, and also each week we'll have a list of potential names to watch as well so that you can take it from right there to building your own trade plan on each particular idea that looks good to your style. This is not about giving you the best trade for the next minute. This is about showing different ideas that are out there so that you can wrap yourself around and find the best way for you to trade the setups that are most prominent. Now, these videos will be raw and unedited, and it'll basically just be the walk through the markets of what we see and how we see it. Let's go ahead and get started. Now, as we move over to the macro page, this is where we tend to start every day on the Power Investing site. We can see the triple play chart. I've zoomed it out a little bit back to a little bit before July, sometime in June, just to kind of see where we've been the second half of the year. As you can see, the SPY and the QQQ are currently still in RSI bull ranges, albeit below the 60 level, but heading back in that direction at the moment. Never really breaking these levels for very long. SPY peaked below it, but immediately came back up. And now we need to see it move back over 60 on this move to reaffirm the bull range that we're in. Now, with the SPY right here at a breakout level, and then you have a little flag here on the QQQ, it looks promising at the moment, but we'll see. We still have to get through those levels. Now, if you're looking at the IWM, you've seen a different story for quite a while. We had this failed breakout that came back down, made a lower low, which it diverged on both CFG and RSI here. Now, at these particular lows, lower the range as well. So we have a previous level of polarity, and then we also have a level that basically gives us the divergence and now heading back above. Now, it's into the MA bands at the moment, so we want to see it move back above this area to kind of put all 3 somewhat back in alignment. Now, you got a big gap up here right around 2028. So again, we still have a good bit of work to do on the small caps, but it's a good start here after a rough fall. Now, when we look down here at the power universe, again, this is an equal weight universe. We'll look at a little closer here in a few minutes, but we look at this for the breadth of the market. And as we've seen of this last bounce, we had somewhat divergences across a lot of our different indicators, especially all the short-term ones, kind of giving us that clue that, hey, short-term things might be a little washed out, might be getting to that point to where it's time for us to kind of roll back higher. As you can see as well, the intermediate term summation index is finally turned and crossing. Now, we are still below 0, so it's got to get above that 0 point to kind of have a little more confidence in where things are from a breadth perspective, but this is our first signal. So it gives us the idea that we can kind of dip our toe back in, wade back in just a little bit. Now, on the macro page, we take a look next at the world. We want to kind of take a look and see where is everything and what's going on in other areas, and where do our indexes fit in the relative strength rankings. Now, again, I use a 3-month relative strength ranking as my primary because I like to find earlier moves. I like to see when things are starting to turn. This list starts with Egypt, then Switzerland, Mexico, Taiwan, UAE, and then the S&P 500. A couple more, Peru and Turkey, and then the QQQ. Now, you can see places like Turkey are not up much over the last quarter and have gotten killed, but made a big jump over the last week. Now, same thing to kind of look at here, as we do in many areas. We can take this and we can search it by the RS movers and see who's moved the most points in the last 5 days. These are the guys who really have moved the most over the last week in relative strength points. Now, we like to take a look at this to kind of see what is performing at the moment, see where they are currently ranked. Now, this 88 is nice, but that's not always where we like to see for the initiation or start of moves. See, like if we look right here, United Kingdom small cap, our small caps are just a couple higher. So they're kind of moving with us a little bit. 4% move on the week, but still down almost 5% for the quarter. Now in the website, you can click on this. If you are a subscriber of TradingView, you will see that it will open up your template. Just a second ago, it opened up the wrong template, so I paused it and got to the right spot. But here we can see the EWUS, the United Kingdom small caps, had a fairly big breakdown here a week or two ago on a gap down and is now moved back up right into that area. Potential failed breakdown, we've got a trend line here coming down over about the 45.50 area. So a move over that of the 45 EMA here could be the start of something bigger on this one. Still an RSI bear range, and the weekly did break a little bit below. But this is what we can do, is take a quick look as we move over from our spreadsheet or grid on the website. Now, moving down to the next section is the Intermarket Etf Rs Rankings. This is an area where we take a look at all the different asset classes in one place, rank them, kind of similar to John Murphy's book, classic book, Intermarket Technical Analysis, which talked about using these different ratios between different asset classes to get an idea of where the economy is going. Well, all we did is, instead of just looking ratio on a one-by-one basis, we decided to rank them all here so we can kind of get a view of where they're going, and then we can do some mental ratios to kind of see who's outperforming what. Right here, we'll see that IYR, real estate's up top, so it shows us some concerns about the interest rate environment, kind of inflation areas here. But we do have SPY, QQQ, and DIA all in the top half. The only one missing is IWM, which is still down here, can't seem to get off the mat. Now, we like to see all four of these in the top half for some more smooth sailing when it comes to equities. Once they start breaking down into the lower half of this list, it's a little more difficult for those markets. But this gives you an idea very quickly of where in the markets is performing among different asset classes. Next, we look at size and style, and the size and style here you can see, and this is basically your Morningstar boxes or whatever you want to call it, large growth, large value, small growth, small value, all those types of things. And as we can see here, mega cap value and large value are both leading still. And then it goes down from there, mega cap growth, large growth, mid cap, value growth, value. I mean, it's literally just the values above all the growths and larges above all the smalls. So it's one of those areas that even with the bounce back with growth, value is still leading at the moment. We'll see if that turns here sometime soon. Now down in the market sectors, this is where we're going to quickly review through these, and then we'll take these up more in detail in the next video. You'll see that there are all the value-based, real estate, staples, and utilities are leading on all three of our lists. Market weight sector list right here is the top one. Technology is right in the middle, and then of course the bottom is communication services. I'm going to note that because we probably want to be paying attention to communication services because it's been down there around the bottom for quite a while. Now when we move to equal weight, we have very similar rankings with technology and healthcare right in the middle, materials there as well, and then again your communication services all the way down here at the bottom. Energy's also underperformed pretty big over the last month, so something to keep an eye on to see if that bounces back or if that is just giving back a good bit of what happened last year. Now in the small cap space, you can see it changes up just a little bit, but not a lot. Communication or consumer staples, then utilities and communication services, and then information technology and materials. Information technology on the small cap versus other small caps is all the way up in the third slot. So maybe one of the areas to be paying attention to if small caps do start to perform better. Now when we move over to our universe page, this is our own equal weight universe of 2,800, 2,900, sometimes 3,000 stocks. It flows based on their market cap and volume, average volume we filter. And so you can see here that it's kind of a rough summer. We had a failed breakout, kind of like the IWM, that came down and got really oversold on RSI. Bounced up, weak bounce, and came back and retested, and now we're bouncing again. The biggest difference here we're seeing is that on this retest we saw a much higher RSI and CFG level. And especially with the RSI holding right here at the 40 level, we found that oftentimes that's a nice hint to the start of a new run, is when it can't break back below that level and it starts back higher, as we saw back here in September. Will it happen again? Don't know, but it's something we certainly want to pay attention to. We've already gone through the breadth, and now we have the relative comparative chart versus the SPY, the QQQ, and the IWM. What we'd like to see on this chart is the IW versus the IWM to be fairly flat. That means small caps and a lot of the broad markets performing pretty well, and for it to be outperforming versus the larger indexes. As we can see, it's underperformed all year, is now starting to try to bounce again. We'll see if this can get any legs. If it does, it means the market is definitely broadening out for us. It's just another way to view that. And then we look at the percentage making new highs, new lows. The first window here is 21 or 10-day. The second window is 21-day highs and lows. And the third is 63-day. So the 2 week, a month, and a quarter. And as you can see here again, when we came back down and got really oversold on RSI back at the end of November, we see that there was a cluster of new lows in the 10-day, the 21, and the 63-day. The highest we've seen in quite a while on the 63-day, pretty much all year. But when we came back down and retested it, those were greatly diminished. And now the bounce out is seeing a much higher percentage of new highs. This is, again, how new moves start. Doesn't have to. We've got to get over this 1175, 1180 area. But once you get a divergence against the new lows and then you get a nice quick spike in the new highs, that can be a good initiation for us to be paying attention to. Now, when we get into our equal weight sectors, we can see here we have the consumer staples, utilities, materials, real estate. Materials has popped in there in the middle, so might want to look at some of those names, but pretty defensive still. Information technology is still in the bottom half. Communication services still on the bottom. Consumer discretionary is also down here in the lows. Again, those are some of the areas we need to see improving if the overall markets are going to perform better. Now, with all these, you can search them, and we've talked ad nauseum here in this video about how this is happening with the subsectors. But if we kind of look at the movers, there's a little bit of glimmer of light here. As you can see, we have consumer discretionary, healthcare, materials, industrial, healthcare. Some things are perking up other than the super defensive names. So I might be focused a little bit in the healthcare and consumer discretionary areas if I was looking for new setups. So there's the macro view for this week. Hopefully that gives you a good rundown of what's going on out there. And in a few minutes or a little while, we will move on to the sector side of things. Have a great week and good luck out there.